So in this week's AMT Insight, I'd like to talk about the impact of smelter production disruption at Malaysia Smelting Corporation and how this could affect what's really been an extreme and unprecedented ex-China refined tin shortage that's been observed so far in 2021. So the market learned in mid-April that MSC was having issues with furnace failures at its Butterworth plant in Penang. And this is a plant that's seen a lack of investment in recent years because they've been trying to transition some of their smelting or their tin smelting capacity to a converted lead smelter in Port Klang. So subsequent to this news, we learned that these furnace failures in Butterworth are likely to significantly impact the company's production capacity to the end of 2021. And as a result, the companies are reducing the amount of ore it's willing to purchase, it's increasing the minimum quality of that ore, changing the pricing terms for suppliers, and for material that it's tolling on behalf of suppliers and then delivering metal back to them, the timescale for those tolling contracts have been increased from 30 days to 60 days from the 1st of June. So what's the impact of this disruption? Well, MSC is the third largest refined tin producer globally. It produced around 25,000 tonnes of tin in 2019, so before the pandemic, a bit less than 2020. So if we make a rough assumption that it's lost around 50% of its capacity, and we make some allowance for redirection of some of the concentrate in that market that MSC won't now accept, that could be redirected to other smelters, maybe China or some to Thailand, then we're estimating perhaps a 2% global supply loss or a 6% ex-China supply loss as a result of this disruption. I mean, obviously, in the short term, that's likely to be more significant because MSC is probably working to re-optimize its smelting production, its smelting capacity, considering the fact that it's lost some of its capacity. And also, concentrate suppliers, it's going to take them some time to kind of rework their supply chains and find alternative suppliers where that is something that is possible for them to do. Also, in the long term, MSC has still got this new plant that they're working to ramp up, and they're saying that they're going to ramp that up over the course of this year to full capacity by the end of 2021. That's something that could perhaps help ease some of the supply disruption as well. But with this new furnace technology they're moving to, it's historically been prone to delays because the technology is a lot more complex. So that's a risk as well. In terms of the impact of the concentrate market, we're likely to see that significantly ease as a result of this MSC news. I think the change in pricing terms has been particularly difficult for some concentrate suppliers, who are particularly ones who are buying material from artisanal miners in places like Africa. That's something that's going to cause difficulties. I think Africa is the biggest supplier to MSC based on our estimates for 2020. And I think particularly Nigeria is MSC is their sole customer, really, for the concentrate in that region. It might be quite difficult for them to redirect that concentrate elsewhere because there's issues there around radioactivity of elements that some radioactive elements in that ore that some smelters may be less willing or capable of dealing with. I think also the China concentrate market is pretty tight, so that could absorb perhaps some of this excess concentrate. But there's issues there with the SHFE price for tin currently being at a significant discount to the LME, and perhaps that will hamper some of that potential redirection of concentrate in the short term. So over the last few months, before this news had really emerged, the participants were perhaps wary of the potential for recovering Indonesian refined tin exports that we've seen over the last couple of months, and also starting to see increased exports of tin from China because of the more adequately supplied domestic market there. I think this MSC news has really kind of blown some of that expectation about an easing of supply conditions from those two factors, and I think it's likely to continue to keep overall pressure on this really tight, physically tight market in the months ahead. So overall, it's clearly had a pretty significant price impact. I mean, this has been combined with a general rally in base metals over the last 2 or 3 weeks, which has contributed as well. But we're seeing the cash price for tin currently at all-time highs, and the 3-month price for tin closing in on all-time highs from 2011 as well. I think we've also seen further pressure on LME stocks, which are mostly what's left in LME warehouses. A lot of that is MSC metal, as perhaps traders or suppliers with customer obligations perhaps are drawing down some of those LME stocks in MSC stocks in LME warehouses to make those commitments with the lack of supply from MSC or the reduced supply from MSC. However, overall, it's quite clear that fundamentals are still very supportive, and the price momentum is there really. And I think that as long as the macro environment remains supportive and there's no big changes there, then I think there's no reason to see a tin continuing along in its current uptrend.